Welcome back to Trader Sage. It's my first video for the month of June. We're going to discuss price action on the ES chart utilizing ICT concepts, and I only want to primarily deal with this week. And I think I didn't speak on Friday as well. Let's see what we can do. Let's reset. Let's erase everything. Start off on the weekly chart for this week here. What do we see anyway? It's also the start of a new month. Let's start on the monthly chart. How about that? So we kind of have these highs up here. Do have the 1, 2, 3 reversal pattern. There's a target. The price traded into this imbalance here. This is significant because it used it as support here. Through. And that's a monthly. Make that like ultra green, right? So we know that's this is the monthly, right? That's off the visuals. So monthly, kind of irrelevant right now, way down here, but we want to see what we're going to see for the month. What can we possibly anticipate for this monthly? So we think about, so we have the swing low here. So rated sell side. Also external range liquidity from this low to this high. This range broke that range, so still external range liquidity, and the larger range is external range. A larger range is internal range liquidity. This fair value gap. This range here again, it's external range liquidity because it rated this swing low and then traded into the larger range. Is that clear? So this from here to here, the first range. So the moment it broke this range, it became external range liquidity, and this range here from that high to this low is the bigger price range, and it went below equilibrium. So this is a logical push higher. Then you can say what we have here. We have had a bearish fair value gap here, which price violated, and we're gonna just do that. And we're gonna call that an inverted fair value gap. Just throw like a border, make that red, so we know that hey, you used to be on the other side, and you switch sides on me. All right, so we have this inverted fair value gap. This month is still pushing higher. It's also the beginning of the month, and you think about the power of 3. So we did have this pull back slightly and then push higher. Only day 3, right, of the month. Second trading day of the month. Third day of the month. So you think about internal range, and you think, oh, should be targeting external range. So in that sense, then possibly this may be the target here. Then we can consider other options after that. Other options. Current interval and below. Yeah, monthly. All right, what else do we see here? Do we see here? I mean, you can get into like this wick here, quarters of the wick here. Get into that. Let's just see what that looks like. I'm not going to keep that on the chart though. Maybe I should, right? Maybe I should. But what's the numbers on that? Make that 10. Right, 59.8225 and 59.8325. So currently 1 point higher than the base of this wick. All right, so that's all I got here. So we leave that like it is. See if that's gonna be low. We really. All right, so let's see here. Relationship to the weekly chart. All right, so we do have like a 1, 2, 3 drives still. Like this is creating a swing. If this right now is a swing high right now, but this candle is still active, it's still forming, because obviously this is June's candle, the first week of June's candle, so it's still forming. Anyway, let's see what we got here. But there's a bearish fair value gap in here. Bearish fair value gap. I think that red fair value gap. You gotta label everything, right? Weekly fair value gap. Going a long way today, huh? So you have this volume imbalance as well. Okay, let's leave that out, right? Right, that volume imbalance or the opening of this candle was traded into, closed here, consequent encroachment of this monthly fair value gap. And held price traded into this, you can say this weekly fair value gap, bearish fair value gap, or through the wick of the monthly on the monthly level. This look like it needs some words too, right? Oh, weekly. What's wrong with you? Monthly. Wick quadrants. So many words, but whatever. Monthly wick quadrants. It sounds crazy, but anyway, you guys know what it is. If you hear still, then you know what it is. Anyway, all right. So we still got these relatively equal highs up here. Run on stops. The same thing here. This one here is external range liquidity. Targeting internal range liquidity. And still push higher. They took out that swing high. Doesn't matter. Or still internal. So where do we go from here? Possibly here, or taking out these swing lows here. All right. Anyway, that's the weekly. No point of drawing this volume imbalance because we got this higher time frame level. So skip the daily, right? Let's see. All right, the daily, we have a consolidation here above a breaker, right? Low, high, lower, low, or right. So it's also trading into this bearish monthly fair value gap. Daily. So the daily chart, we have internal range inside of May 12th daily candle, and internal range to external range. Check out the low here, back down into internal range, this May 27th fair value gap here, and it should be aiming for external range again. So maybe price will raid Thursday, May 29th candle. We draw that out. I kind of broke protocol, right? Use these higher time frame, bigger high time frame levels than using. So let's see. All right, so we leave these monthly and weekly levels here, and you can see prices in this crazy range between. Again, this is a monthly level. This is a weekly level. We could have highlighted the daily levels. But we have pretty much the same situation here. I have a balanced price range here. I like this. I like this for a shorten opportunity because we have the Dylan range. Have price run this swing low into this imbalance. Then you had this May 29th, Thursday candle rate this swing high. Then you have a pullback, a break in structure, a retracement. Didn't make it to the imbalance, consolidated, ran back up. So right now, yeah, with it, the current time frame and below. Change it to the light, right? Okay, then we have another fair value gap here. Either way, balanced price range. I get the idea that we should see lower prices here. All right, so external range, pullback, internal range, external range, pull back into the same fair value gap, internal range, external range, pull back into this imbalance, possibly into here. I mean, why go back here, right? Because if you think about support and resistance, you say, what caused price to do this? What is it doing here? Like, what is it stabbing down into? What is this stabbing up into? Right? What is this breaking out of? What is this stabbing back down into? Right? It's literally like, this is why this is significant to me. This is why my eye went there. So it's not no other reason but that. So it's like a reclaim bullish fair value gap. And you can see it again. Price stab down, use consequent encroachment of it pretty much essentially. Essentially here, push higher into the weekly bearish fair value gap. Pull back, breaking structure, consolidate it back inside, like the body's all just all in there, stabbing down, wicking down. And you can say here too, right? Bearish fair value gap if you wanted to. And I'm not gonna get that let's use this one. Boom, for this. Like replaced. So this one didn't go all the way down here. In that case, so let's say 4 hour. That's gonna bother my brain. All right, 4 hour fair value gap. And I guess we label this one too. All right, so we had like a breaker here. Low, high, low, low. Extend that out. You into order blocks and they use this propulsion block here. Didn't really do anything, but here it did. Boom. Get it back down into it. No gas. Drop below it. And I will use something new here. So all of this noise, let's stick with that. So we'll see if this is a market maker sell model, and we're looking for price to get back down here essentially. But obviously higher time frame, different situation, but we're going to treat the 4 hour like our weekly, like our daily chart. So 4 hour, low hanging fruit. This would be the target. Obviously got imbalances here. That would be the first target. You want to think discount the premium here. This is eyeballing. This is about mid-level. So if price is going to continue up, it's okay. If price trades back down into here and then pushes higher. And so that's one theory. One theory. What else is there? All right, let's get into, am I missing anything? So that ran this low. All right, boom. So let's go to the 15-minute. Get ready to close this out. Ready to, are you ready? Are you ready? Bada bing, bada boom. What we doing? All right, so this is the dominant price range here, here. That's what price is. It's in this high to this low. Then we have this price range here, this low to this high. Doesn't matter. This high to this low. Doesn't matter which way I call it. That's what it is, right? So low key, you say they. All right, so boom, right? Price ran. This stays high. Validated, retraced into this balanced price range, drop. So we have a market structure shift here. Market structure shift here. Rebalance that, took out the low, consolidated inside here, drop down into this 4 hour imbalance. Market structure shift. This is key because of this imbalance here. Drop back down into a steep discount into the 4 hour fair value gap. Breaking structure here. You got a small fair value gap here, but whatever. Break. This is technically like bearish. This was an inverted fair value gap all right here, right? Because that's what we determined. Back here was violated. Boom. So right here it became an inverted fair value gap. Boom. And price back down. Boom. This is a reclaim. Now reclaim bullish fair value gap. Let's 4 hour. Fair value gap. All right. So let's go. Where were we? 15 minutes? 15 more minutes. You get out of here soon. Do this. All right. So you think about purge and revert. Usually that's on the 1 hour chart, but let's talk about it, right? All of these daily lows were ran. Boom. Right. Purge these lows and the day of the purge, including the day of the purge. You count back 3 days. So 1, 2, 3. And then you count 1, 2, 3. So ideally price, we were looking for price to get above here. And as you know, as we discussed before, price goes above equilibrium, above this level here. The probability of it going up here becomes lower and lower. But obviously you trade what you see still. So broke here, broke the high, pull back. So you got a turtle soup here, market structure shift, pull back to this tiny fair value gap, into this 4 hour fair value gap. Another break into this inverted fair value gap. Sent it back down for optimal trade entry on news. And that tiny fair value gap, I'm gonna just, for these like tiny ones, I just use these parallel channels because and it's like, do I? Oh, so by the way, if you guys don't know trade in view, you just, I got it on a weak magnet, and click that and you hold the shift key to make it straight. So it doesn't, like, you don't have to like eyeball it. I just did it good just now without the shift key, but you hold the shift key, you just click the button, and then yeah, that's how you do that. Let's do that over because I want to start at the far back one. And that's it right there. That's bullish, green. All right, so you see what I'm saying? See what I'm saying? So again, this is why not this low to this high? Because this one ran stops. This one ran stops too, but which one you think is more significant? This run lower or this one? Say less than, right? So this would be the range that price was in at this time frame, this high to this low. I'm eyeballing the high, and I'm gonna just throw the 15-minute chart. Throw that on. I mean, because it's so crazy, right? Let's see how accurate that is. 59.33. The high on this candle is 59.3275. We all lined up. All right, and that will be optimal trade entry long. And again, we have to think about time and price. The time right here is 10 o'clock on the 10 o'clock, right? This was during the London session. So in this case, price made the low of the day. You're going to think about time and price theory. This made the low of the day. Also traded within the previous day's range. Pull back. Optimal trading. That's what this low to this high is, the previous day's range. From the midnight to midnight. Time of day, midnight. London made the low of the day. News drove price down lower, still inside this range. And 5870.25 would be the optimal trade entry long at 78.6. And we obviously just missed that by a tick. That's okay, right? Entry target 1 was hit this day at 4:15. You have a pullback, bleeding out during the Asia session, bleeding out until we get to the London session next day. And that's between this level and this level. All right, bam, optimal trade entry again for another daily setup. I'll eyeball this one. Yeah, be not like eyeball and stuff because type of that's pretty good. That's the high 59, 55, 50. That's what we got, and this was already anchored, so we don't have to do anything there. Boom, optimal trade entry. Let's see what these bodies are. You just hover over it. It's 59.13.25. 59.13 is the level. 59.13. Either way, that's good money as an optimal trade entry. I don't have the 70.5 in here, but because all of this is a lot too. So if it's between this range and this range, that's good money. That's good money. So optimal trade entry long during the London session. Here is your news at 10 o'clock today. What news was that? Built report. Light pullback. 9:30. Light pullback here. Right now we had target 2. Optimal trade entry. So that's 2. How many trades I highlighted? Definitely spoke about London session, pullback, a New York session, London session, and I guess we get into here. Let me just using this 15-minute chart. Let's, I don't like just showing the monthly open. Okay, better. So remember, this is a reclaim bullish fair value gap. And this is a 4-hour bearish fair value gap that's been violated. It's poked above it. You're gonna see if this holds price lower. I just wanted to drop, so don't. I got problems. Nah, I don't have problems. I got solutions. Pray what you see, right? Good things are supposed to happen to me because I deserve it. Inshallah. All right, let's get it. Let's get back focused. Reclaim bullish fair value gap. So this is holding price higher. What else we got here? We have a bearish fair value gap. And that's where it pretty much consolidated at. Broke above it, retest back down on this candle. 645. Push higher, breaking the Asia high. Consolidated here. And then traded here. Pull back down. Oh man. All right, good. So that's an entry here. Order block entry. I really don't like I don't like really highlighting order blocks because that's not my main strategy. But that's the thing, why you have to stick to your time frames and kind of walk your way down, because if you don't walk your way down, then you won't know, like on another time frame. And the only one we're going to go lower is the 5-minute. I'll focus on this area here and maybe this area here. And we want woo, right? Some type of frog eyes, but whatever. What's life without creativity, right? Who still looks at the clouds and say that looks like this, it looks like that? I do, right? All right, so boom, right? I'm going to delete this. But there's opportunities here, right? So this was a bullish fair value gap. You also have this one here. Why? Again, why, right? You have this also, and price reacted to it here, but whatever. We're going to focus on this area here, and we have a bearish fair value gap that's been violated. Here, you break a market structure, retrace back into here. This is a inverted fair value gap. Again, like different time frames, it's a different PD array. It's so fascinating, isn't it? All right, so you can say, what is this? He's fishing, right? But this is where it's at. These are the rules. I didn't make the rules. This ain't my concepts. These are ICT concepts. And you follow them, especially this one on journaling, right? Where he kind of goes, I think he went to the weekly, then the daily, and kind of broke it down like, hey, that's the first one that's like, I'm not going to say that's really, really clear, but where he really tells you that one time frame PD array may look like another PD array on another time frame, right? Anyway, yapping. It's now 29 minutes. It's time to go because most of us have attention spans of a fish. I don't even know if that's true though. Like, do fish like really have us? That's like 3 seconds of memory. But anyway, this is actually a breaker too. Got a breaker. If you want to use the breaker, use the breaker. Got an inverted bearish fair value gap down here. And the reason why I highlighted that, because this would be the low of the fair value gap, 5938.25, and this would be the low of this swing low, 5938.25. So I don't know. I only pointed it out not for the precision's sake, but to show the significance of the PD array and show the level of key support and resistance, right? At the PD array formed its own key support and resistance. Out the trend entry long here, like I mentioned on the 15-minute, but it's clearer here to me. There's your long. 2 standard deviations. That's good money. Not counterfeit. It's good money. Enter. Look at that. This one. Save that. Cool. All right. So got the entry, optimal trend entry long. Broke the high that we used to anchor the fibs on. Retrace because this was a key level. Now it's, you can say a support, but we have a fair value gap here. Right. So I recently heard ICT say that on institutional order flow, right? Where he said, like, these levels that you choose, they only work if there's a fair value gap there. That's what he said. So that's the reason why I pointed this out. Fair value gap is just below that. Not sure. Want to see what that high looks like. Clearly, I use it here. Consequent encroachment of this bullish fair value gap on a 5-minute time frame. I want just out of curiosity, how many ticks this is away from the high of this fair value gap. Oh, identical. All right. So again, this is precision, not necessary, but for me, it's not necessary, but it's significant because we dealing with key support and resistance. And you can see the precision here, how significant these levels are. And we have 1 standard deviation, pull back into this order block. You can draw that out. Kind of want to say, hey, price traded into it again over here. Feels like I'm being greedy though, but you got the 5, bam, boom. Here again. And here you got an imbalance, fair value gap. And right here. And then price higher. 2 standard deviations, that's enough. That is enough. Anyway, where are we? This PM session was like trash, so something's about to go down. Because it's still trash right now. You want to do like a trend line. Technically, it broke that trend line right here. But that's not the model. We don't need that. Anyway, I think that hopefully it made sense, man. It made sense to me. It felt really good, really calm, really smooth, really collected, really collective. So I'm just grateful. Just thankful for the skills and for the opportunities that I have to learn and be able to take advantage of what I know. That's important, right? Like, knowing stuff is not that important. It's what you do with what you know. All right. Thanks for stopping by. Please like, comment, subscribe, drop some comments, and just share whatever you're going to do. I can still tell if you're sharing it. I can still see what you guys are focusing on. In terms of what you watch, I just love this. It just looks, again, you got to work these charts how you see fit, right? Anyway, sometimes I pinch it real tight, so you can still see what's bullish or bearish, but you can see better. I can see better the pattern. Of course, it only matters most when you are. Only matters most when you are when price trades into a high time frame key level, and we want to do this. That. There's a quarters. I'll walk that. Walk that out. Okay, let's do 310. And then it stretches it out to tomorrow. Actually, on Thursday. Hey, let's pull it back some. Stop being greedy. Let me see what price does. Hey, take the midpoint off because we have it here. And I don't know what time frame this is on, but it's definitely not this one. That up. One. All right, so where we at? We at the weekly level, the monthly level. Let's not be too. I'm gonna adjust this one. I'm gonna adjust this monthly level to a weekly level. Same situation. This feels like, anyway, this would be, all right, so weekly. So now we got nothing but weekly levels here. We don't really need this one. Kind of document that, but price comes back down here. You can do what you need to do. That's too much noise. And that's what we have here. So price is technically right now in the consolidation between these two weekly fair value gaps. I like it like that. All right, so all right, that's all we have. Nothing really changed there. This is a 5 minute array. And I have a solution for this yet. Like, could have been more cognizant when I actually drawn them to make sure that they drawn on only on the time frame that I'm drawing them on. It gets messy if you leave it there. It's like, where did that come from? Maybe tomorrow you'd be like, what's going on? Low key, this can stay. This can oh, and one more. Anyway, it's the cosmetics. This would like clean up the makeup right now. Like, did all this paint work. Let's clean it up, make sure it's where it's supposed to be. All right, so that's where we left off. Or oh, what happened to? Did I delete it? Oh, needs to go. All right, we back. We back to normal. All right, these are all 4-hour levels, weekly level. Yeesh. Way over there. Here. Boom, bop. Bam. All right, where we are. Where we at with it. All right, anything else? You got that bearish fair value gap here. About to do his thing. Not to do his thing, man. Anyway, we got all these levels, the whole price. See what happens when it gets below 50%. Anyway, deuces. Please like, comment, subscribe. Thanks for stopping by.